Welcome back to another episode of the Lendr Podcast. Today I am joined by special guest speakers, Ken and Ari Walker. Thanks so much for being here.
Absolutely.
Yeah. So good. So I do just have to say, because I know I already mentioned this, but I've been following both Ken and Ari on social media ever since we scheduled the podcast. And I feel like I kind of already know you guys, even though I don't know you at all. So I'm really excited to do this. We had this podcast a couple weeks out, or probably a month or two out. So it's good to finally get on your guys' schedule and talk shop. But like I said, no, it's just so fun because like I've seen, Ari's showing up in a T-Rex costume for Halloween and different, barbecue sliders. I'm like, man, I really wish I could go to that golf event. And I don't know, you guys just seem like such a fun couple. So I'm excited for this.
We are a fun couple.
There's nothing doing what we do unless you're having fun at it. So
that's right. I need to take some lessons from your book because I think sometimes I get too in the weeds and just focused on work and, more borrowers and more investors and more this and marketing and, all the different components of the business, which we'll talk about obviously, but it's easy to get, your head down in the weeds and not so much, focus on the fun aspects of life. So perfect. So let's just dive right in. Let's give everybody kind of your 30-second, minute-long elevator pitch that you just introduce yourself and tell us about your business.
Well, we're Ken and Ari Walker. We are second-generation owners for a private money company. Pacific Direct Mortgage is a company that we launched last year, actually. New branding. We wanted to expand our abilities to help more buyers, borrowers, and work with brokers. So we love doing this. And then we have another company where we then take care of all the loans. So we service the loans.
But we have been doing private money, even though this new branding and company that we started last year, it doesn't make us newbies. We've been doing hard money since 2000.
For 15 years.
Yeah, for
15 years.
Over 15 years doing hard money. So we've seen it all, done it all.
We're licensed real estate agents, licensed lenders.
Okay. So my first natural question is why break it up into two separate businesses? Why not just have like both the hard money and all the servicing under one umbrella?
Well, it actually started because about 2 years ago, in the prior company that we were with, it was owned by my parents. They owned a mortgage company, and we were working at the mortgage company.
Okay.
They didn't want to touch servicing. We wanted to have servicing as one of our companies. So we started servicing before we started our own mortgage company. So that's really what happened.
Yep.
Got it. Okay. That makes sense. And what was kind of like the catalyst behind that? Was it just like you were tired of dealing with like third party companies, or you just saw that there's like, there's some money there that you can skim off the top, or maybe all the above?
No, what happened was we were spending about 30% of our time on servicing related issues, servicing related questions and problems from borrowers, from lenders, and from the friggin' servicing companies that were supposed to be handling it. They're calling us to deal with things. And we're like, we're not hired or contracted.
Why are we paying you? Yeah.
Yes.
So it eventually got to the point where like, this is stupid. We need to take this over because our lenders aren't being properly cared for. The borrowers aren't being followed up on when they miss a payment. And all of a sudden we've generated this bad loan because no one told the borrower they had to make a payment that month. Right. Mm. So we said enough is enough, started our servicing company, and it's been absolutely wonderful. Our lenders are
amazing.
Absolutely rave. We created the servicing company. I know this probably isn't a servicing company broadcast, but we created
That's okay. We can talk about it.
We created the servicing company to be extremely strong, where every lender that we've been working with has complained about servicing companies.
So we're exceptional. We want anything that was like at fault or errors that our lenders like, no one answers the phone. No one's responding to me. That's where we excel. We want to do over and above. So far, so good. It's been great.
Yeah.
That's amazing. Okay. Yeah. And are you servicing other people's loans, or is it just your own?
We service primarily our own, but we do have some of others that we service. And we just actually launched a whole
starting to branch out.
Yeah, a whole department for that exact purpose. So we're now taking on loans from anywhere and everywhere.
Amazing. Wow. Okay. Well, when I get tired of servicing my own loans, I'll send them over your way. That sounds really great.
Your lender.
Yeah, we'll take care of your lenders, and we cooperate with brokers, so not a problem.
I love it. It's so interesting because everybody, especially in private lending, like everybody runs their business just slightly differently.
Yeah.
Like with everyone that we've talked to, some people are like, I service everything in house, which I personally do. Other people are like, no, we'll give it to FCI or a third party servicer. Or, some people are like, we just do the servicing, or we just do the origination, or we don't collect payments, or we do collect payments, or we don't wrap points, or we do wrap points. And it's so interesting that like everybody can be in the same business and still do something completely entirely different.
It's so true.
That's the beauty of private money, though. There's so much flexibility to it, which is why we love it. You can really
Yes.
personalize for each thing.
Yeah.
Absolutely. We see a lot of people that we talk to actually have kind of a background in like formal mortgage lending, Fannie, Freddie, and they get so tired and so frustrated with just like the red tape, and you have to do it in this specific way, and there's no other way, and so they get frustrated. And we find a lot of people leave that because they realize they turned away all of these borrowers and all of these good customers, and like I still have a loan product that I could offer them, and then they kind of get into hard money. So
Yeah.
Very interesting. Yeah.
So true.
So tell me, I want to hear your background between, so you said it's a family run company. You've been doing it for 15 years. And correct me if I'm wrong, Ken, was it your mother who started the company and then you kind of took it over?
My parents started a mortgage and real estate company about 36 years ago.
Wow.
And then, let's see, what happened? Yeah, in 2008, when everything, turned upside down.
Shit was hitting the fan?
It was hitting the fan. We started focusing on real estate, specifically flips, where we just buy it, flip it, and sell it through the company. And then about maybe 4 or 5 years later, we dropped all conventional loans because we were doing conventional as well. And then by that time with HGTV, everyone was a flipper. So it got a little too competitive. So we dropped flipping and went 100% hard money. And then we got our licenses right around that time. Prior to that, we were just doing real estate.
Your real estate license.
Okay.
Yeah.
So then in 2014, we got our Lendr license and turned our company into just hard money. And it was still owned by my parents until my
2021, his dad passed, unfortunately. And then we joined with his mom. So we all own the companies. And then last year she retired. And then with some of the financial turmoil that was going on, we couldn't expand the way we wanted to with the programs to be able to help and work with brokers even more. So we decided to start our own legacy and start our own company. And that's
we rebranded it all, made it more contemporary, more young, and it's been going well.
Yeah, it's been going great.
I love it. Well, I mean, to make the company young, all you have to do is have Ari show up in a T-Rex costume, and like that's all it takes. I love it.
And the Pole Park sliders. Everyone.
That's right. All right. I would ask for one in the mail, but I just don't think it would be the same. So the next time you guys have an event, you let me know. I'll be there.
It's a family recipe that we do. So.
Oh, it's a secret recipe. Okay.
His dad.
Yeah.
I love it. Oh, that's been great. Okay. So tell me too, so it sounds like, again, a lot of people that we talk to, they follow that traditional path between, just wanting to leave their 9 to 5. So they buy a couple rentals, and then like the rentals either are kind of a pain or don't make enough money. And so they move into the flipping. And then after a while, flipping, you realize is not that much better either. You've got delays and contractors that you're dealing with and supply shortages, and then the house sits on the market for 6 months, and then you're like, maybe let's just be the lender and just it's a little bit easier, maybe not easier, but just different problems. It sounds like you kind of followed that same transition. Maybe not so much with the rentals, or maybe you didn't touch on that before, but I'm curious kind of your transition all the way from start to finish until you got into hard money.
Let's see. So for us personally, we started in real estate in my parents' real estate and lending company. We did real estate-ing for a while and realized that it is so much work for so little recompense that we decided, okay, this isn't the best way to go. So let's start flipping houses, because it was right after the 2008 crash. We did really well for about 2-3 years.
You did longer than that.
Well, for the first 2 or 3 years.
78 flips is what we did.
Wow.
We averaged 2 to 3 a month, and they were, full remodels. We're buying the REOs and
Got it.
The copper gutted houses, and
Lovely.
all that was going on. Fix them up and sell them, because at first no one wanted to buy them. So there was a stigma about buying an REO property. We didn't care, because we'll just flip it. But that worked really well for a while, until everyone became a flipper. Once everyone became a flipper, then the margins shrunk drastically. And that's when we decided to back out of it. Through our flipping time period, though, we did hold on to a bunch of rentals. So we have that as, another little side passive income. And then after the rentals dried up, after the flips dried up, we then went into hard money and didn't want to have anything to do with all the regulations on conventional financing. So,
and I think with one thing you had mentioned, Bryce, every experienced real estate agents, we then were flippers. We then needed private money, so seeing what was needed and all the experience going through has definitely made it way easier for us to help more people. Like, we duplicate when they call what they need, qualifications. So I loved it, because we're also landlords. So we've gone through being renters. We've gone through landlords. So all of our experience, I think, has made this company what it is. We really are able to associate with people better.
Yeah, and we work with all the same real estate agents that we were working with back then. We work with flippers who are still flipping, who were flipping back then. Some of those flippers are some of our lenders now.
Yeah.
Got it. I think it's interesting, because I think that experience is so underrated, in the sense that, like, I can't tell you how many people in our own business, like, we've had borrowers come to us, say, hey, I'm looking to get a loan for this property, and I'm like, I would not touch that with a 10-foot pole. You're going to lose money, and these are the reasons why. A, B, C, X, Y, Z. And some people, I'm sure you've had the same thing, will kind of, like, pout and complain and whine, and they'll either go find another lender to do it, or they'll come back after the fact and say, oh, thank you, like, I now see the error of my way. So being an agent, being a landlord, being a renter, as you said, like, that years and years and years of combined experience is so valuable, and I don't think people value that enough.
But
yeah. It's I love it. Okay. And I just have to touch on the fact that everybody listening knows that flipping is not, like, it's not Chip and Joanna Gaines. It's not HGTV. It just really is not, like, it. Everybody and their dog thinks, I'm just going to go flip a house. And at the end of the day, when you do it, like, it's really not that, it's not that complicated. You do new flooring and paint and electrical and whatever it is, but it's not the cutesy design. We're going to tear down this wall here and, add all these little frills and things and have it, it's just the reality of it is not, it's not there.
That's true. It's a lot of fun. And when you finish a house, it's definitely rewarding.
Very
and
rewarding.
We work with a lot of flippers, and I enjoyed flipping when we were flipping.
Yeah.
But, 7 days a week, 10 hours a day, it starts to wear on the body quite a bit. So being a lender is easier, smoother.
And you spend more time with the kids.
Yeah, spend more time with the kids. I do have to exercise more now, though. So.
That's right. So you were in there yourself swinging the hammer. You weren't just, like, subbing it out yourself.
No.
Yeah, no, I was there doing it.
Wow. Oh, wow. Okay. Even more reason to become a lender. Just a little more easy on the body. I love it. Okay. So enter hard money. I did want to ask you, because on your pre-show notes, you mentioned that you guys have done hard money on primary residences, and typically in the industry, that's, I shouldn't say a no, but it's almost like kind of frowned upon, just because you have issues with, like, Truth in Lending Acts or RESPA or some of these other, like, primary home buyer different regulations and things like that. Can you talk about that more, just for out of my own curiosity, because I've never heard of other lenders doing that?
Yeah, definitely. I view consumer lending as very important because one, there's not a lot of people who do it, and it's a service that's needed. You know, people want to buy a house and live in a house. So if we can provide that service, then we're doing something for our community. And as long as we're following the Truth in Lending, RESPA, Reg Z, all the million regulations, then there's no problem. So in my viewpoint, as long as we know and follow the regulations, then there's no issue, right? So we have a number of programs that we run all of our stuff through that spits out, okay, you got to do this by this time, you got to do this by that time, make sure this disclosure goes out. These numbers don't match, so get them matching before you send it out. Make sure that we're in compliance with everything. Because once you're in compliance, then it's just like any other loan.
But it does require a broker who will remember everything. There is a lot to it, but he doesn't shy away from the extra training, the education, the remembering of rules and regulations.
Yeah.
So we've been doing it. We love doing it. And we're able to help many more people by.
No kidding. Wow, yeah. That is genius. I mean, that really, because I think you're the first lenders that I've ever talked to that have done that. Because again, we have a lot of people that we speak with that are like, I just kind of want to get away from like the convention. Like, I just want to deal with investors who are more experienced and just know what they're doing. So it's a really interesting way to go about it. And I mean, obviously another good revenue stream for you too. That is so great. Wow. And then are these loans, are they being like sold off to Fannie and Freddie? Are you just like originate them, or are you still like funding them?
It's only hard money. We stay away from Fannie and Freddie. It's all hard money.
Interesting. Okay. And then your underlying investors, it sounds like you call them lenders. I assume I call them investors, but does that bother them at all? Are they okay with like a long-term mortgage?
So a loan on an owner-occupied property can be done one of three ways. A bridge loan, where he has his own primary and he's pulling cash out to go buy a new primary and sell that primary. So that one's not a long-term loan. It can't exceed 12 months in length. So we do an 11-month loan. No prepay, no default interest, loan estimate, closing disclosure. We've got to go through all that. Ability to repay doesn't apply on that loan. So it's fairly simple to get done. Then we have an owner-occupied business purpose loan. So it's a business purpose loan on an owner-occupied property. That's exempt from quite a bit of the regulations for an owner-occupied loan as well. Not all of them, but a lot of the regulations are exempt on that particular program.
Got it.
And then we have one program that we do that's a 15-year loan, but we've structured it in a way that's favorable to a lender and still feasible to a borrower. It's 3 years interest only, and then 12 years fully amortized.
Oh, wow.
When they hit year 4, their payment jumps up significantly, but the payment can't be more than double what a prior payment was. So you have to make sure those calculations are in place. But no borrower is going to want to pay, $2,500 a month, $2,500 a month, and then all of a sudden they're at $4,300 a month.
No kidding.
So our borrowers look at it, okay, I've got this loan for 3 years. So let me fix my credit, file my taxes, do whatever.
And then go refi somebody else.
Exactly.
Got it. Very interesting. Yeah, I have never heard of people doing that before. I love it. I learn things every single time I chat with people.
We have a giant database of investors, huge database of investors, and every investor has their own opinion, their own underwriting guidelines. So we'll have some investors that only want owner-occupied. We have some investors that only want land. Some investors that only want a non-owner-occupied rental property. So we've got lenders who have their, feeling for what they want based on whatever their history is.
Got it. My goodness. Wow. Do you mind if I ask roughly how many investors do you guys work with?
7. We have 700.
We have 7 now?
Yeah. We have almost 700 that we converse with.
Yeah. Wow.
Obviously, we've used up some of the money. So, they're out for 2 years or something, but we're constantly looking for new investors because we constantly have people coming for loans. But we have over 700 we communicate with.
My goodness. Wow. That is incredible. Holy cow. Do you guys actively market, like searching for more investors, or is it just like word of mouth from family and friends? And
Both.
that is, I don't know that I've heard of an operation that big. I mean, to be candid, we've probably got maybe 24 different, investors that we work with, just because they like the shorter term fix and flip loans and things like that. So it's really interesting that you can cater to so many different types of people. That is incredible.
And thank you. So we're always, but it's interesting because your 24 investors might have huge portfolios or, who knows, retirement funds. Whereas a lot of ours are individuals. They're like, Bryce, you come here, you're like,
yeah, you're like
a couple $100,000, I'm ready.
Yeah, we do make sure they're accredited and all
we
that.
have to make sure they're qualified.
They have a couple hundred in the bank ready to invest.
Yes.
But, their net worth could be anywhere from 1 million to 100 million. But that 100 million or that 1 million guy, he can only invest 100,000 at a time.
Yeah.
Got it.
So we need quantity. So, but I'm absolutely, anybody who's listening to this podcast that's got like billions, we will work with them. I will definitely
we'll get your portfolio handled for you.
I love it. And candidly, like that is part of the purpose of this podcast. Like I want to, I love private credit. I think it is just an incredible investment vehicle. And so truly, like if anybody's listening and has some additional capital on the sidelines, like please reach out to Ken and Ari, because we'll happily put it to work for you. So great. This is awesome. Yeah. So, okay. That sounds good. I'll take it. Okay. And then you guys do you only lend in California, or are you nationwide, or you?
We're primarily California. 99% of our loans are California. We've done a few loans in Hawaii, a few in Florida, a few here and there, but every state has their own guidelines. So we've got about 20 states that California's broker and NMLS license cooperate with, so we can lend in those states. Okay. But some have specific regulations, like we can do some in Florida, but we can't promote that we do in Florida. We can do some here, we can do some there. None of them can be owner-occupied consumer purpose, only non-owner business purpose.
Mm-hmm.
So I've got pages of regulations that we have to follow per state.
So California is the easiest.
Yeah, California is easy because we do it all the time. Our docs are set for it. It may be.
Well, I was going to say most people shy away from California because it's not the easiest, but you seem to be like the regulation compliance guru. So if I have any questions, like I'm going to give Ken a phone call, because my goodness.
We will take
California is easy because we're already set up for it, all the regulations and complying with them. But
got it. I love it. Oh, wow. So good. Okay. And then do you have any issues with like, at least in my own business, and selfishly, this is a question that I have just because you guys are definitely further along than I have. I've only been doing this for 2 or 3 years or so, but for me personally, I feel like it's very much like a seesaw. Like I either have too much capital and not enough like loan volume in my pipeline, and then all of a sudden it flops and it's just like, oh, I need more capital, then I have to kind of go in like capital raise mode. Does that ever go away, or is that just like the nature of the business?
Well,
2 ways.
Yeah.
Because it won't go away unless, which is how we got all the investors. I had to go on that. We needed investors.
Yeah, it started like that.
That's how it started.
But now that we have so many investors, we don't so much have that liquidity problem.
Yeah, we don't have this.
It's just constantly a chase to keep up with the lender's needs.
Yeah.
Because, when we have an offering that's available for our lenders, we'll send it out like as a little snapshot. If it's a really good loan, like, a 30 LTV in an urban area that's, got a great credit borrower, somebody who doesn't really need hard money, but due to circumstances has to have hard money, we can get 12, 14, 20 lenders who all want that loan.
You're jumping all over that.
Yeah. So then it's, how do we appease everyone? Because 11 lenders are going to be upset that they didn't get it.
Got it.
We're constantly on both sides marketing. Yeah. How do we get new reaches? How do we open up relationships, such as with you? You have borrowers, but you need capital, or vice versa. You have too much capital. Well, let us work with you. Lenders are happy. Borrowers are happy. We really like that.
Here's our goal and what we shoot for every month. And if you do this, then this will solve your seesaw problem.
Okay.
We strive to get about 8 new lenders added to our portfolio every month.
Wow.
And we strive to fund 20 to 25 loans every month.
Got it.
So with those new lenders coming in and about that number of loans coming in, it seems to even itself out.
Okay, so you don't have like the massive swings necessarily.
Yeah. And then some lenders get paid off and then they fall back into the loop, wanting another loan. So 8 to 9 new ones every month, plus ones that get paid off, seems to be the happy place to handle between 20 and 30 loans each month.
I see. Okay. And it sounds like correct me if I'm wrong, you're not doing like a fund, so like these investors are kind of sitting on the sidelines until you have a deal and then you place them and do like a trust deed or like co-lender type agreement.
Yeah, we're generally one loan, one lender, unless it's a larger loan and it needs to be fractionalized. But if you're on our list, you'll see the offering that comes out and you're like, I like that one. And then we'll send you the due diligence. If you still like it, then you approve it. We do the docs. You're the lender. You fund. Done deal.
Wow. Okay. Have you ever thought of doing a fund? Like, does that make so? And again, selfishly, like we have a fund, and I've actually really enjoyed that model rather than kind of like trying to piecemeal these different people and individuals onto the individual loans. It's just this is my bucket of capital, and these are my loans, and I can kind of divvy it out how I see fit. Have you ever gone down that like route, or is it just like I don't really want to deal with that? Because you're the compliance master, so you could handle that no problem.
We have looked at it. We kind of followed in the footsteps of my parents. They wanted to stay away from that. Their experience, what they observed in 2008 when everything went to hell in a handbasket, the brokerages that got in trouble had funds.
Interesting.
Now, that does not mean that that's the case all the way around. That just happens to be what they observed. So they wanted to stay away from that model because of that observation. So then we just kind of went along with that and stayed that way. Our attorney has recommended doing a fund. We've gone to seminars and conferences where they look at the pros and cons of doing a fund versus what we do. And they both have their pros and cons. Neither one of them, at least for that seminar, seemed to be better than the other. It's just two different models of doing it.
At the moment, we're experienced with this. It does work. And to be honest, with us opening this company, opening our other company, and trying to expand, like I've been hiring 4 people in the last 5 months. We want to get to that point, but we have no attention units, to be honest. Yeah. We're trying to deliver and do what we do.
Yeah. And if it ain't broke, don't fix it,
Absolutely. And to be fair, I'm not criticizing the model whatsoever. Like most lenders actually do that model anyway, and it works very well. But I was just curious if seeing it the size that you guys are at now, if that was ever a consideration, which it sounds like it was, but that's very good rationale.
We've cursorily glanced at it a few times. And that's about as far into it as that we've gone. And then we have so much going on, we don't really have time to go further into
it's a fleeting thought and it's gone.
Yeah, we'll put a pin in it, and if we need to, come back to it.
Got it. And so in my own experience, again, I've really liked the idea that this is your bucket of money and you can deploy it how you see fit. But the cons that I've seen are, you're paying interest on those funds, whether they're being utilized or not. And so sometimes that can kind of incentivize you to do riskier loans, or you're like, I've got to put this money to work. And so this may not be like the best opportunity. Whereas your investors are sitting on the sidelines until a deal does come up. And then you can kind of match those and pair those accordingly and make sure that it fits for, your buy box and your credit box, as well as the lenders as well. So Pros and cons, both sides for sure.
Yeah, exactly. Those were some of the points that were brought up. Exactly.
Gotcha. And so you've just opted not to. One thing I will say, and then I'll move on. I do feel like a lot of the information around funds is that it's very difficult, or it's very like there are a lot of compliance headaches, or a lot of regulation, or a lot of cost with attorneys and different things like that. And I actually haven't found that to be the case. I think there are a lot of attorneys who are charging $100,000 to set up a fund, but you don't have to spend that necessarily if you know what you're doing. And it sounds like you're following a lot of like the accreditation rules and things like that anyway. So all that to say, for anybody listening, or for you guys personally, if you do ever go down that route, I don't think you'd have an issue, with that whatsoever. That's right. But that's right. Yeah. But I do charge in pork sliders. So just keep that in mind. I love it. Would you guys mind? And again, if this is like too much, are you comfortable sharing like how much you have assets under management?
That we're servicing somewhere around 60 to 70 million at the moment.
Wow.
And that's what we've built up in the last, year and a half, little over a year and a half.
Yeah.
Oh goodness, all that in a year and a half.
Our mortgage company is
servicing.
Productive.
Yeah, we already have, and we already had, I'll put it that way, a thriving and very productive mortgage company. Just none of it was being serviced. It was all being farmed out to other servicing companies to not handle it properly and call us back. So when we took that over, it's just been growing, and we want it to continue growing.
Wow. So for everybody out there listening, what would be your, and again, selfishly for myself as well, what is your advice for like what you do on either like a weekly, daily, monthly basis to constantly be looking for capital, or for borrowers, or for more lenders, or whatever it may be? Like what marketing pieces have performed really well for you?
Okay. Well, number one, obviously, is word of mouth. So past borrowers. I'm a beast when it comes to keeping their information and really helping them. Like with our servicing company, we've actually we're almost done setting up a whole department to optimize credit, to help set up a refinance. So we have good personal relationships with all borrowers. So we're there to help. So I always communicate to them. We want to help friends, family, referral sources. That's number one. I send old-fashioned mailers to them. We did it once a month, once a quarter. They loved it. They kept it for over a year. I had one person calling, I got your flyer for a year. I'm like, why? So I didn't forget. So I thought, that's me. I'm like, why? So that's number one. Then the second most, I guess I say profitable, and I could be selfish, but we like helping others. Our best thing is creating relationship with other licensed professionals, such as yourself. You might have products that I can't offer, or maybe they qualify elsewhere. I want to set up that relationship with you. We can help the borrower. And then you have people that come to you that maybe you can't help, but we could. So why can't you and I work together? We win. We make money because we're working hard, but then the borrower gets a solution and they get to move forward. So I think it's just our own personal passion. We don't like saying no. So if someone calls, we try to set up a connection. And then after 15 years of doing it, it's just in having our company maintain its integrity, maintain its brand. I'm really good. How do we keep our brand? We're a family. We are personable. They're going to call in. They get me. They get Ken. They get my adopted aunt, But it really is. They get real people, and they call in saying, wow, I got a person. I got called back. We have policies. You call people back. And it's a shame other people don't feel that way, or maybe they only do 3 loans a year and they're like, great, they were $5 million each. I'm done for the year. But there are people out there. There's clients, there's friends, there's family. So I think it's just our own passion, because we couldn't get a loan. We couldn't buy a home when we moved to California. He was flipping. I was $10 an hour. We had 800 credit score almost. We really good credit. We had saved up money. We could not buy a home. So his dad said, okay, we'll get one of our lenders. Literally, the investor said, great, here you go. And 9 months later, we lived in a house. We had fixed it up, flipped it, and we were out of an apartment that we lived with 2 friends, our baby son. We were in this like 5 of us in that little apartment,
In
and
a
it only
shoebox.
cost us $200 more a month. But
And we had a whole house, a yard.
And a yard.
Like,
we couldn't get a loan unless it was for private money. So to us, it's a personal passion. We were there. We know how this is helpful. So I think it just comes down to that. And then I think with marketing, if I'm around, I ask. Like I'm like, do you want to invest? Do you want to earn upwards of 12% return? Instead of having the headaches of maybe being a landlord and now you have to go fix the dishwasher and fix this. Why not come and try to get more passive income? So I think it's just the passion that comes with what we do, sincerely.
I love it. I love it. Well, so I tell people all the time too, like what happens when, I don't know, a lot of people say, let's go out to dinner, and they go to a restaurant and there's an hour and a half wait. Are you going to sit there and wait for an hour and a half, or are you going to go somewhere else? And like, it's common sense, like just be a human being. And like, nobody likes getting outsourced to India. Nobody likes talking in like a call center, and like you just right off the bat, and like, okay, press 1 to do this, and then press 4. Like, just can I please just speak with somebody? And like it's so simple, it is so basic, but all of those like basic principles have just gone out the window. And so I don't know, the bar to mediocrity is so incredibly low. Like, you really don't have to do much to perform and provide an incredible service. Absolutely. So I love that. And it's just like, it's such a good reminder, because I personally try to do the same thing. I just like, give me a call or shoot me a text, like shoot me an email, like send me a tweet, message me. Like there's all these different ways to like get a hold of me, and like we'll figure it out and take care of it. So such good advice.
True. Exactly.
I love it. So, and also I really love
the who we work with.
Yeah, absolutely. And I love the personal like mantra behind it. Like, in a time of need, like this quite literally like transformed your life, and now you're trying to do that with other people as well. And I think, again, for my own personally, like a lot of the rationale behind being a lender is selfish. I think it's a great business model. It's quite profitable. It does very well. But when you have that underlying, like it's great. It really is. It is such a good motivator. I love it. So good. So I want to be conscious of your time, because we're coming up on 45-ish minutes. But if anybody who's listening, they want to get a hold of you, what's the best way? What's your emails, phone number, socials? Like, please share any information that you have.
I think you can put that in. Well, probably the easiest, obviously, would be the website. That's very easy. So PacificDirectMortgage.com, and every page has a contact form. But then, of course, our phone number, write it down, 707-708-0797. They can give us a call, and we've got multiple lines. So 707-708-0797. And we pretty much kind of live here. But the phones are on at 8:30 to 4:30 Monday to Friday. But we do kind of live here. But yeah, through the website, our phone is the best way to reach us. And then obviously, as we create relationships, we have business cell phones and stuff, but immediate answer, email, website.
You can email us. Everything's Pacific Direct. Yeah. So info@pacificdirect.com.
Love it. Yeah. Okay. Yeah, really. And like, anybody listening, if you have any questions or you need a compliance question, Ken is your guy.
Yeah.
Within the barbecue pulled pork slider.
I'm not a licensed
you email Ari.
So those compliance issues will be addressed accordingly.
Have you guys seen that meme where there's like a fax machine and it prints out and then the paper drops into the paper shredder? Have you seen that?
Really good meme. Bryce, if you are not friends with him on Facebook, Ken Walker, oh my gosh. People internationally follow my husband because his
for the memes. Okay.
Cheer and happiness and eye rolling, and I can't believe it, but you definitely have to try it. Oh my
Done.
Lord.
It's on my to-do list. I love
It's
it.
all PG too,
So
so.
PG.
We're good. I love it.
So
Okay.
really, since I don't know, and maybe you have some new people on the podcast. So where are you located?
So I'm in Idaho, at least for the time being. Uh-huh.
Wow. So do you lend only in Idaho, or are you all over the U.S.?
No, right now we're only Idaho. So I personally live in Idaho Falls, which is a pretty small area. We're like population 80,000 ish. But we do a lot of lending in Boise, Twin Falls, and kind of surrounding areas. But yeah, right now is like mainly just Idaho, and I'd like to kind of build and tap out that market before we start expanding to California to take over you guys.
Yeah, well, people say, well, why don't you come here? Come to Florida. We have so many people in Florida and then Hawaii. We're like, you know how busy we are in California right now? We're going to finish this and then
Stay in your lane. Yep. It makes a difference. It really does. And I don't have a compliance department, so it's just me, myself, and I. So we're going to stay local for as long as we can.
Okay, but Idaho's good. We get rid of every now and then, so now I know who to send them to.
I've got one in Idaho that came in this morning, so I might reach out to you.
We might reach out.
Yeah, please do. I love it. Okay. Any last parting words that you'd like to leave with the audience?
Well, I sincerely hope that our podcast that you graciously invited us to actually has helped expand people understanding, because investing in real estate, you can feel the real estate. Like, to me, it's such a strong investment. There's risks to everything, but to me, with the value, I think it's great. So anyone who has ever considered, expanding portfolio, how do I make some more passive income? Trust deeds are a great thing. So between Idaho, California, you have your people. And
That's
then
right.
I sincerely hope they think maybe it's expanded their ability to, how can they become a homeowner? I know there's so many people with dreams to become a homeowner, but they're self-employed, difficult to prove income. They only have an ITIN, or all these other reasons. Debt-to-income ratios might be too high right now. That's where private money comes in. So to me, sincerely, if you've ever thought of being a homeowner and you just couldn't through banks, credit unions, for whatever reason, higher qualifications, reach out to Bryce, reach out to us. We're willing to help. So I hope it helped expand their ability to maybe get their goals for family or themselves.
No, I know it has. Yeah. And I just like to put a cherry on top. One last quick little story. The very first rental property that I ever purchased was a single family home, and then in the backyard was like a mobile home. And it wasn't even real property. It was literally just a mobile home in the backyard. And I could not for the life of me find a lender to lend on that, because they said, "Oh, manufactured property, like we're not." And I'm like, no. I like it had, just forget that the trailer is even there. Like I'm buying this home on a permanent foundation, and like this is the thing in the backyard is just a freebie. It's just a car with a title, essentially, And quite literally, and again, it was just ignorance, but I called 45 different lenders.
Oh my goodness.
45 different lenders until I found one. It was like, oh yeah, we'll just like close our eyes and pretend it's not there. I didn't even know that hard money was even a thing, because I could have had that funded in 2 seconds, but I didn't know. Ignorance is bliss, I guess. But all that to say that if there's a will, there's a way, and I wouldn't let one no or two no or 44 no's disqualify you from whether that's buying a home or a rental property or whatever it is. Like, there are people in this industry who have loan products and different options to allow you to fund your dream, whatever it may be. So all that to say, like, there's a way, and I wouldn't let that shut you down. So good. So many good little tidbits. I love this. So good. I love it. So Ken, Ari, thank you so much for being here. I really appreciate your time. I know that the audience got a ton of value from this. I know I personally got a ton of value. And I'm going to look into that, like a little bit more consumer lending, because I've kind of steered clear of it as of late. So very valuable. For anybody else who's listening, thanks for sticking around to the Lendr Podcast, and we will catch you next week.